This just in, the Fed just reduced the overnight lending rate by a 0.25 percentage point. And this part's interesting to me. Expects 2 more rate cuts to be made by year's end. However, the members see the new year bringing just 1/4 point cut. So this is interesting. How does this affect real estate investing? How does this affect people that are looking at lending? Lending's such a big part of leverage and buying real estate. You can use lending to make a mediocre deal great, or lending can make a great deal mediocre or shitty. What do you guys think? How's this going to affect the rates?
I think it's interesting. I think, people are going to react excitedly. I think that it's hard to know what the rate cut will do. I mean, I'm working on a purchase right now and a refinance, and I know the lenders both on that purchase and the refinance have been watching and, to see what the Fed was going to do. And today I had a lender tell me, hey, like the interest rate's probably going to be a little bit lower now that the Fed cut rates. So on the real estate side, on my refinance, on my purchase, like I think this is looking good.
Yeah, man. I mean, I think it's positive. I think that they have to weigh, obviously, inflation, which has come down, but still a bit sticky. And they have to weigh the jobs report. The jobs report was revised down considerably. I think all in all, it's good news for investors. A lot of people think that again, I say this all the time, the Fed presses a button and then immediately the rates are lowered. I think a lot of this, at least this 0.25 point rate, I think has been priced into the bond markets, and a lot of, residential mortgages, as well as the lending we work with, is a spread off the treasuries. And so I think a lot of it's been priced in. In fact, I just got I can revise one of my loans down on a commercial building that I have by 1.25 points, which is huge. And so I think it's great. I mean, 1.25 points that's a $2 million note. That's a substantial reduction in my debt service, which is obviously just an immediate cash flow raise. So I love that. I just think that I think the 0.25 point's been priced in. If it was just a 0.25 point, I think that we wouldn't see a lot of movement. However, these extra 2 points that are getting signaled by the Fed, that could also then play into lower rates. I think that's probably, in my mind, maybe more impactful to what's going to happen in the near term on lending than this 0.25 point.
So what do you think that's going to do in the overall real estate market, though? Do you think that's going to get buyers more excited? You're going to get sellers putting their properties on the market? I mean, I've been selling off some of my smaller properties, and some of the properties have already been, they've been selling pretty quickly. Others have been sitting there a little bit. Some of those are in the same area, so I don't really see a big kind of rhyme or reason on why maybe one sold faster than the other. But overall market, I know it's hard to just, broad stroke the entire country, but we have areas where homes have been sitting for a while. Some are price adjustment. Does this 0.25 point actually impact and make a huge difference, overall? Obviously a full point, if a year from now, we're a full basis point down, I do think that'll make an impact. But do you see this 0.25 point really making an actual impact on a lot of these local markets?
Yeah, I think that there's not only the actual tangible reduction in the cost of debt that matters, but also it's psychological. Buyers and sellers react in a psychological way, especially buyers. There's been a lot of buyers on the sidelines. They've been waiting for rate reductions. They feel like interest rates are high. They're not high historically, but in the past, 5 or 6 years or whatever, we've seen rates very, very low. So with in recent history, they are high. And I think people will be excited by this rate reduction. They've also signaled further rate reductions. So it could be this weird thing where certain people come off the sidelines, but others are going to wait for those subsequent rate reductions. I don't think it's totally priced in, though. I think you will see people dive in, whether it's commercial or residential, and you could see an uptick in buying activity. What I do think is interesting, though, is we're in a time where inflation's also going up. So the Fed has made a decision to decrease the rate. And I think that's potentially because of jobs data, but we also have inflation going up. Last month, inflation went up, I think it was like 2.9%, it's actually going up at a decent clip, way above the Fed's goal. And so we have this weird scenario where now we can see inflation rise at a faster pace. Time will tell, but that could also affect buyers, that could affect consumers, and we'll see how that, how the whole thing plays out.
Yeah, I think overall activity is going to increase. Like you said, you've got buyers that are on the sideline, whether it's residential homes or, commercial real estate. Buyers are going to enter the market because rate reduction gives you better leveraging, gives you better borrowing power, and so you can actually pay a little bit more, right? With in commercial real estate, especially when rates compress, cap rates compress, which increases value. And I think you're also going to see sellers come in. I think sellers have been waiting for this. If they've been on the sidelines and they didn't have an immediate need to sell, I think they've been waiting for this signal. So maybe they were waiting to list that property. And now they're like, okay, I'm going to have a bigger buyer pool, which makes my property more competitive on the market. So I think you're going to see more deals. I don't know if you're going to see deals that are priced the way we want them priced, but you're also going to see a lot more buyers. And I think it's as a real estate investor, I'm stoked. I'm stoked because I have big refinances on the horizon. We've got another park that should be in contract. There's a lot that we're looking at here, and I personally am excited about it. And I think the person that's prepared with education and have the right connections, and they've got deal flow, and they've been looking, I think they're ready. If they're ready, great. But if you're not ready and you're just now thinking this is the time to dust off the books and learn commercial real estate investing and get into it, I think you're late. I think you need to have been prepared.
I agree. I agree with that. Like, I think about, like I was already working on a refinance. I was already working on, a purchase. So yeah, this excites me. Like, hey, maybe I'll get a little bit better rate, on some of these properties that I recently listed. Yeah, maybe there'll be a little more excitement and sell. They'll sell a little faster, but I don't think it really changes much. Like, my investment philosophy doesn't change. My strategies really don't change. And again, you can't always time the market, but I think people were already adjusting for this rate reduction. And I do think we're expecting to have, a few more. And I do think that will price in as, we go 3 months out, 6 months out, and a year from today. It'll be really interesting to, be on here with you guys, 6 months from today, 9 months from today, 12 months today, and kind of look at like what did change in the real estate market over the last 12 months.
Well, I think the last comment I just want to make too is like, we don't really quite understand the conversations behind closed doors with the Fed. And I think this also could signal that they expect harder economic times ahead. They want to do this to stimulate the economy. Even during a time of high inflation, they've also talked about 2 more or 3 more rate reductions, which is just basically saying we want to continue stimulate the economy. And I think that's probably due to jobs data potentially. We could tie that to tariffs. Maybe that was an input to the economy that will obviously have a tangible output. And so I do think that like we could see trouble ahead, trouble meaning economic trouble, not meaning there's going to be less deals or more deals or whatever. I'm not saying that, but like the only reason they're reducing interest rates in a time of inflation is because they see trouble ahead. Is that a recession? Is that a small recession? Is that a blip? Is that a depression? I'm not going to try to predict that, but I do think that behind closed doors, there could be conversation going, guys, jobs are dropping very, very, very quickly. We're seeing consumer, data that's not great, and we need to adjust this thing and turn the ship to the left or the right. So I just want to keep that in mind as we go forward.
Yeah, that's a great point because a lot of people are all enthusiastic about the rate reduction, but there is a reason behind the rate reduction. In an economic recession or reduced output in the markets like that can affect real estate investors. Your tenants have to go, like if there's jobs continue to decline, like your tenants have to go to work and make money to pay rent. So there are puts and takes. I will say just personally, between the properties that we have in contract, the properties we're refinancing, I personally have like $10 million in debt that could be a lot cheaper now. So I'm actually 50 basis points is a huge impact to $10 million in debt. And so like I think the timing feels great for me. I guess my next question, I know Gabe's got to jump, but is this too late? Right? That's another question. This is another discussion. What is it? Trump calls Jerome Powell too late, Jerome, or too late, Powell. Like, are the Feds too late on this? I personally feel they were too late to start bringing rates back up when we were having, damn near 0% interest. It felt like. I felt like the economy was white hot. I personally felt the Feds were asleep at the wheel on the front end of this thing. Were they asleep at the wheel at the back end of this thing? Are they too late? Meaning, it's like you use this analogy all the time, Mitch. It's like turning a giant ship, right? You put an input to the ship, and it takes a long time for that ship, which is the economy in this scenario, to turn. So, you guys think they're too late, or is the timing perfect?
I don't know, man. I mean, I think my default answer is like, I don't care, man. It's always a good time to be in real estate. Like sometimes real estate's more challenging than others. Sometimes there's just an insane amount of, it seems like every deal is just amazing. At other times it's, it's hard to find a real estate deal, but you got to be in the game. And I think that's the important piece. Like a lot of people that are talking about this, 25 basis point, like it doesn't necessarily directly impact them. Maybe it impacts the economy, but as an investor, we're not trying to time the market. It's the old adage of like time in the market. And, when you're in a situation where rates drop, like take advantage of that. When you're in a situation when, prices are up, there's opportunities to take advantage of that. So it doesn't like excite me or not excite me. Like if my lenders are going to give me a little bit of a break on interest rate, great, but the deals worked with how where interest rates were a month ago, so that's great too. So I don't let it emotionally impact me one way or the other, and I don't let it really steer the ship of my investment decisions.
I would caution people like don't put rose-colored glasses on. Stick to the fundamentals. Understand debt service coverage ratios, understand net operating income enhanced, like understand the game, understand the fundamentals. Don't feel like you have to rush in and make knee-jerk decisions on buying or selling. Like approach everything with prudence and back it by actual financial data and the actual properties that you're looking to refinance or buy or sell. Like don't make knee-jerk decisions. Be smart.
All right, guys, I got to run. For our audience, go out there and buy some fucking real estate. I got a call with a seller, and then I'm off to go see my son play soccer. So that's my day.
Yeah, Mitch is in his trailer, and I got to hop on a submarine. So we'll talk to you guys later.